All right, thank you, Eric. Let's set it settled up here for just a second. So our first panel is going to set the stage for the overall macroeconomic environment and what that means in the various sectors of the economy. We'll start off with, I want to get the reaction of folks from the election and the markets and the reaction that they've got. We've got experts in the equity markets, we've got in commodity markets, crypto, real estate, all different things. You've seen the names of the folks in the bios. I won't take any time introducing them. We'll get straight right into it. So, John, let me start with you.
Fantastic. Thank you, Michael.
Yeah, I know you're shy.
Everybody.
I know you're shy, but
very shy.
Get over this. So
very shy. Yeah.
So first question to you, and then the other panelists I'm going to give it. So we just had the election, and we had incredible market reaction in a number of different sectors. Equity markets reached all-time highs. We got the 10-year bond rate going up. You got crypto moving. You've got commodity markets moving. You've got implications for real estate. John, let me start with you. What are markets telling us about the results of the election?
Well, Natalia and I discussed this a week ago, and it was like, kindred spirits. We were both seeing the same sort of thing. Regardless of someone's view about politics, the support for digital assets and crypto rather than CBDCs was tremendous on one side of the side that you worked for, in fact, Michael, when you were in the administration, and it was absolutely the opposite on the other side. Gary Gensler's been a pariah, a horrible head of the SEC.
Tell us what you really feel.
Yeah, exactly. And, I'm sure when he hears this, I'll get investigated because that's the way they do business these days. But yeah, he's been terrible. I've said it for years. I blame him partially for issues like FTX because there were just so many opportunities to bring out a crypto ETF, the Bitcoin one first, of course, Ethereum and so forth. But they dragged their feet on it. And now we have the first administration in the history of crypto that is crypto friendly. That is going to be huge. We got here, folks, without having support from the government at all. They wanted to regulate by basically enforcement. And that's a horrible way to do business. So they drove a lot of innovation offshore, Michael. They drove people like the Winklevi and others offshore. And the innovation that people like them, if you want to view them as sort of like Elon Musk's of crypto or whatever, you don't want that going to Dubai or Malta or Zug. You want it staying here. And so I am delighted that we have that kind of administration coming in. Can't wait to hear who that person is. And if Anthony Scaramucci were here, I'd probably lift a middle finger to him about how stupid he was to actually say, I support crypto, and yet I want this other candidate who doesn't. So anyway, I'll leave it there.
Okay. All right. So Michael, let me come to you. Bloomberg.
Very shy.
You write more traditional commodities, right? Like minerals, oil, all that sort of stuff. What is it? What are those markets? The change in those markets telling us about the election?
Well, I'll riff off John a little bit. I'm a macro commodity strategist, Bloomberg. The unique thing about what I do, having been John an ex-trader, we both worked in traded pits and board of trade, so we get the markets and day trading. I have no bias at Bloomberg. It's wonderful. They actually restricted my ability to trade, which ended my addiction to trading. The key thing from a macro standpoint is last year when I was talking about crude oil going down and gold going up and considered somewhat of an idiot, less so this year, but you have to make the call when you're a trader, I earned the nickname McGlone. Now let's point out big facts. So we'll start with Bitcoin. I completely agree with what Eric said. You look at the macro for Bitcoin, definable, diminishing supply, increasing demand and adoption, price must go up over time. It's gone up. That's the problem. Digital Gold is a great book I read by Nathaniel Popper like 6-7 years ago. I'm sure John would. And I got it. I've always used Bitcoin as digital gold. I jumped on. I came to Bloomberg 2016 like no one's covering this space. So I started covering initially, figured it's just a bit of a bubble. 2017 collapsed. And then I got bullish on one day in April of 2019 when Bitcoin was hovering around 4,000 to 5,000. That's when the U.S. government came down to Tether. What is Tether? It's the number one traded crypto. It's a U.S. dollar. We got to remember that the technology is overwhelming. It doubles the volume on a daily basis of Bitcoin. I was in Hong Kong 6 years ago. My colleagues were saying, Mike, no, you need to understand this. This is the first time in the history of the world that people can get access outside of their currencies on their phones, and the government can't really find out about it. So the technology is overwhelming. We saw that from Eric. We see that what's happening in Propy. Don't underestimate it. But what's happening now is Bitcoin, in my view, is much more, it's less digital gold. It's more of a highly leveraged version of beta at the moment. Now, so and also it's like everybody says now how bullish it is. That's when people like John and I tilt over and say this is the scary part. So we wrote about how important it was for the government to figure this out 5 years ago when Mr. Trump pushed way back on it. Now everybody's on board. You get it? And we're at record highs. We've had the ETFs launch. We wrote about that 5 years ago. We've had, it doesn't get much better. And the problem is I look over at the U.S. stock market. It's the most expensive in history on many measures. I'll just measure versus GDP 2 times. It's 100 years. Versus the rest of the world stock market. It's the highest in 50 years. Versus the Bloomberg Commodity Index. It's highest in 25 years. Versus gold, the highest in about 17 years. So I look at the whole spaces. We are overdue for some normal reversion. Volatility is very low, assets are very high, and this is the time you look for alternatives. Now, Bitcoin's been a great alternative, but right now its correlation with the S&P 500 is about the highest ever on the way up. So what does that mean? What if beta goes down? Bitcoin trades 3 times the volatility. So people in the space always tell me, yes, this is going to be the risk-off asset. Right now, it's completely risk-on. The risk-off assets are gold and treasury bonds. And gold has been beating beta for almost 3 years now. The S&P 500 total return. So look forward. Let's, as Natalia said, let's predict headlines for 2025. No risk in that, but that's my job. So I predict this trend will continue. Crude oil is going to go to $40 a barrel. You know to blame if it's wrong. Gold's going to go get to 3,000. I said the same thing 2 years ago. So finally, it's just going that way. We can dig in why. We don't have a lot of time. And Bitcoin's going to have a problem when we have a correction in beta as we enter this global recession. So I'll end with this. From a commodity standpoint, we have a clear global recession kicking in. Starting with one date, February 4th, 2022. That was the date that President Xi and President Putin announced unlimited friendship. Since that date, gold's at 50%. Bitcoin's up about 70%. But the S&P 500 total return is about 35%. Crude oil's down 20%. The Hang Seng's down about 20%. Commodities are down about 20%. That's a body in motion. And what changes that? We're going to get tariffs, and there's basically 100 countries that have net exports with the U.S. And I've enjoyed saying this for 20 years. Everybody in the world says, yes, we want free trade as long as we can have a trade surplus with the U.S. That's just going to stop. So from a commodity standpoint, I expect it's going to accelerate. I still think gold's going up, crude oil's going down, and Bitcoin's copper is the key indicator. It's trickling down. And Bitcoin is going to have a problem because right now it's much more highly correlated with the stock market than it is with gold.
Oh, thanks. So you've already made some predictions, which was going to be my next question, but I'm going to drill down on a couple of those in a second. But I'm going to bring Natalia in here. So, the markets. One of the reactions we saw was that the stock prices of Fannie and Freddie shot way up, and there's some speculation on the retail part of the housing market that the Trump administration may be amenable to privatizing them, taking them out of conservatorship, those sorts of things. But we're also seeing some reactions in some of the interest rate markets that may be effect on commercial real estate. What's your overall perspective in terms of what has changed since the election in terms of the outlook going forward?
Yes, Mike, I agree with you. Of course, those high mortgage rates have been the main cause for the stagnation in the real estate market, especially in residential. People cannot afford home ownership this year due to those mortgage rates going up. And we would expect, in the industry, especially the residential one, would expect that mortgage rates would go down. However, what we are observing in the past weeks, it actually went up to 6.72%. As reported by Freddie Mac on average. And of course, mortgage rates there are following the 10-year Treasury yield, which today went again up to 4.4%. And why it's happening? Because, of course, the Federal Reserve decided to become more cautious, and investors see that there's more opportunity in treasury bills. Now, before I get to the real estate point, Actually, it provoked a great innovation in the crypto space, in the Web3 space, because now many RWA companies are actually introducing T-bills on chain, and it leads a lot of institutional players to pay attention to this new rails of making money on yield, but via on-chain vehicles, as T-bills on chain. So now back to real estate. What we're observing is that the residential market is just stagnant. No major price drops because homeowners are just deferring their decisions to move. The major moves have happened right after COVID, as many have had to expand their environment. And as for commercial real estate, of course, it will remain challenged. It's very expensive to get loans and debt for new construction. However, there is a new upcoming wave of data centers and warehouses across the country due to the AI innovation primarily. So on residential, my bet on residential, it will remain stagnant but somewhat stable because we have a record high number of homeowners having their equity. I think it's around 62% in the country. And with commercial, it will be just a shift of the way how buildings are used today.
Thanks, Natalia. Let me pick up on that point, though, the continuing role of technology, right? So we had the election that's like sort of a one-off event, see things going forward, but we see the continuing evolving of technology, blockchain, Web3, now AI. It's going to, and one of the implications is going to have incredible demands for electricity moving forward. Traditional old forms of electricity, new ones going forward. So, Michael, let me pick up on your point about, your predictions on commodity prices going forward. How much of that is driven unrelated to the election and just simply technology moving forward, another factor?
So a book I've been reading right now, thanks to Tom Keene mentioned, we talked earlier, is called Power and Progress. And I learned the term techno-optimist. And that's when you mention that, first thing you think, yes, that's part of the reason I was bullish Bitcoin 5-6 years ago and bearish crude oils. I'm a techno-optimist. Everything that's happening, you got to understand, technology is happening so fast. So AI is part of that rapidly advancing technology. It's a demand pull for energy, most of electricity. But at the same time, we're having massive increases in the ability to create and generate that electricity. I have an electric car. It's 10 years old. Okay, it takes electricity. I installed solar panels in my house 10 years ago. It's just it's happening so fast. Modular, small, not modular nuclear reactors, everything. The key thing when you think electricity in this country is what's the number one source of heat, electricity, and fertilizer? It is natural gas. This year, it traded at the lowest price since it first traded in 1990. Okay, so there's going to be more demand for natural gas, but it's super abundant. So we can create more of it every day as long as the price can stay a little elevated. We'll create more of it. So I'm not worried about, from a commodity standpoint, about the demand pull for electricity lifting commodity prices. It starts with natural gas. So we got plenty of it. And, typical now, it's just about storage. You can generate electricity cheaper now through a solar panel than anything. It's just about the storage. But the way I see it is because of this major transmogrification, particularly with 50% of all EVs or vehicles in China being EVs, and every country in the world has to put tariffs. U.S. put 50% tariffs on Chinese EVs back in May, or we're going to crush our automotive manufacturers. This is the same thing that the Model T4 did. It's just a matter of time. So I see it as that's demand pull. There's plenty of supply for that electricity. And it means natural gas first. It means all alternative sources, solar companies, which I think is much better way. But it's just, where does it stop? And this is where I tilt over to. That's why I say overall, copper will probably outperform crude oil. Copper should continue to go up, electricity. But you got to look at China. And the bottom line I see from here is, I'll tilt over to what Natalia said. You mentioned interest rates. So, yes, there's more and more demand for electricity, but the supply is coming on, no problem. But I like to tilt over to interest rates because of what's happening in China. 10-year yield in China is 2.12%. For the last, we only have data like 20 years. It typically averages higher than the U.S. Our 10-year yield is 4.44. So what happens? The average of the top 10 countries in the world, outside of the U.S., top 5, their interest rates are about 100 basis points below the U.S. So what happens? You get a bit of a migration. Either they go higher or we go lower. Fed's cutting rates, in 2 hours? No, 4 hours or so today. It's just a matter of time. But So I see severe deflationary forces kicking in. Electricity is part of the demand, but we can bring on that supply at the fastest pace ever. And I'll mention one book, The Price of Tomorrow by Jeff Booth. Big Bitcoiner. He just pointed out, I see a few heads shaking. Yeah. He pointed out we just don't underestimate how fast the technology moves. And remember when Intel mattered? And now it's what's NVIDIA? What's next? So move so fast.
ARM Holdings.
Yeah, there you go. Yeah, thanks. So John might use the term techno-optimist. I haven't done it yet, but I imagine if I go to Wikipedia, there's your picture next to the what we're
It might be.
You're very pro technology on this. Tell us about like what trends that's going to translate into the economy. There's been incredible tailwinds. AI, any company that experiments with AI has incredible productivity with that stuff. That's going to flow through corporate earnings and a bunch of other stuff. What else can we expect from technology in terms of?
Well, we're already seeing the huge demand that Mike mentioned for electricity to charge your vehicles, for the electricity that it takes to run data centers, to cool them, as well as to run that data center. And those AI searches that are somewhere between 7 and 12 times the demand for electricity that a typical Google search is. So he's exactly right as far as SMRs, small modular reactors. These are reactors, folks, that are about the size of a trash, a 30-yard trash thing that you haul in when you're seeing people, or a cargo off a cargo ship, one of those big units. That's about the size of this. So it's not your grandfather's nukes, where you see a big containment dome and you see a massive cooling tower and all that sort of stuff. No, these data centers will have these SMRs right on site. And that will be approved much faster under this president than it would have been under the previous president, who's still somewhere, we don't know where. And I think it will also be a situation where the demand for uranium will be through the roof. And I was talking with Mike Casey and Mike McGlone back in the green room about some of the issues around, for instance, when you talk property rights, blood diamonds are an example of that, because people wanted to know that the diamonds they were buying were from a certain place that wasn't killing its own citizens to get those and so forth, hence the name blood diamonds. But I think you'll see an awful lot of exactly what Propy does in rare earth minerals like lithium, cobalt, manganese, all the stuff that goes into Elon Musk's or BYD's EVs. And I think that people will want to know where these came from, as well as, of course, now with Russia and so forth, being Russia and Ukraine, one of the largest areas where we have uranium, and we don't have access to it right now. That's perhaps about to change, but people will want to know, where did that uranium come from? Is this from Wyoming or is this from Ukraine? And blah, blah, blah. So again, tokenizing those kinds of things, Mike, huge going forward.
Great. Perfect setup for Natalia for the last words here. We're almost done with the session here.
Yeah, it's been fascinating to discuss what the future is. Before us. To your point, actually, we'll have 2 sessions today discussing mineral resources and property rights in those countries like Latin America countries, as well as Ukraine and Russia, how we can bring those property rights to people so that we avoid wars, violence. And so Hernando de Soto is here today to have a dedicated presentation on bringing those property rights. As you know, his book, The Mystery of Capital, is a seminal book written in 2000s. However, he's bringing a new concept about this topic that both of you have mentioned today for the first time at the summit. So I'm looking forward to this discussion, and we'll see what would be the implication of bringing the property rights at sub-level of soil on chain with a new set of rules, and how it will impact the macro implications. So I'm very excited, and thank you so much for.
I walked with him last night, and he talked my ear off about exactly this. So I wish I could stick around for it, but at least I got a preview last night, Natalia.
We will record it for you.
Thank you.
Fantastic. So, Natalia, John, Mike, thank you so much for giving us your insights. We're out of time. Audience, please join me in thanking our panelists for a great discussion.
Thank you very much.
The next panel is a fireside chat on real life applications on chain. So